Good evening and welcome to this session of the live virtual coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to be back again with you all. I'm here. I am able to see Aisha ji is here, Diksha, Darshan, Rajni and Bhumika. Welcome. Aisha is raising the point. Yeah, there seems to be a little bit of an issue there. Today evening, Negotiable Instruments Act 1881. That's it. Tomorrow and day after, I suppose you will be having recorded lecture. Okay, recorded lectures will be there, which you can watch because I have some other commitments on these days. So I cannot, not be able to take it live. But you'll have my lectures, which are recorded for earlier session. And please do any queries that you have on those topics, just send a query to the institute. They will send it to me. I will clarify it. Those two topics are basically theory topics, not much of complication. You can read it on your own, but do watch the video so that I will guide you through the topic and important points and all that. Fantastic. So today we will be continuing our discussions on the Negotiable Instruments Act 1881. Yesterday we covered a lot of good ground and I said I would revisit this topic. Do you remember? I said I'll teach you. Yeah, Mayurji is here. Rushita Sharma. Welcome. Kavita Lamsal. Welcome. Welcome. I don't know if it's Lamsal or Lamsal, but whatever. Welcome, madam. And see, I said that I'll revisit this point a little later. Why? Because unless you know some of the technical terms, how can you understand the presumptions? So, presumption means it need not be proved. It is presumed. Presumed is deemed. That's it. There is no need for you to prove. If somebody is saying it is not so, they have to prove. Okay. So the minute there is a negotiable instrument properly prepared and signed, etc., then until the contrary is proved, until the other party says, proves, see, the following presumption shall be made. Which is why a negotiable instrument act is a very powerful evidence. A negotiable instrument is a very powerful evidence. Suppose you have a promissory note signed by X and he is not paying you the money. You go to court and file the promissory note. That is sufficient evidence. Are you able to understand? To prove that there was consideration. The minute you show the P note, promissory note, you will file it with the court. You need not prove consideration. If the promissory, in that promissory note, if X has said, I undertake to pay a sum of rupees 50,000, it means that he received 50,000. If he says he has not received 50,000, that he only signed the pro note as for some other purpose, not whatever it is, he has to prove it with evidence. Mere stating it is not enough. He has to prove it. Whereas your pro note is more than sufficient to prove that it is you have given 50,000 to him. Are you able to understand? So every negotiable instrument was made or drawn for consideration. Same thing for bill of exchange also. Whether if sale of goods has happened, subsequently the drawer has drawn the bill on the drawee has accepted and it has been negotiated. Thereafter, nobody can question whether sale actually happened or not because consideration is, and you have to show that the bill of exchange was drawn and accepted under misrepresentation or fraud. It's up to the other party to prove it. Have you got it? I don't have to prove anything to anybody. Now, as to date, see the date of the negotiable instrument is very, very important. So, the negotiable instrument date is very, very important. Therefore, you can, whatever date is mentioned in the instrument is the correct date of the instrument. It was made or drawn on such and such a date, no doubt about it. Time of acceptance. Whenever the bill is accepted, you remember presented for acceptance, that is the time. Okay, and if it has accepted within a reasonable time after its date and before its maturity. Okay, acceptance date is presumed. Time of transfer. Every transfer was made before its maturity. See, I'll tell you how it is. Suppose now you will understand. A bill is drawn after sight. That means what? A bill is drawn 30 days after sight. That means After presentment for acceptance, the bill will be paid 30 days afterwards. How to count 30 days? From the date of acceptance. And it will be over before maturity. So if it is presented on a particular date, it is presumed that it was accepted before the date of maturity. And all endorsements were made before maturity. If you are going to say it was not done before maturity, the person claiming it should prove it. The order of endorsements. See, every endorsement will be first one endorsement, then below that, then below that. Now, that order which is appearing on the negotiable instrument is the order in which they appear. So, A, then B, then C, like that. That order also very important. Similarly, in the lost promissory note, bill of exchange was duly stamped. When you're saying that the promissory note was lost, it was duly stamped. And finally, very, very important presumption. This is actually one of the privileges of a holder in due course also. The holder of a negotiable instrument is a holder in due course, unless it is proved contrary. So see, I am the holder. How will I become holder in due course? When I have got it for consideration before the date of maturity, without knowledge of any irregularity in title. Now you are saying that I am not a holder in due course. Then one of this you have to question. You have to prove. Then only. Otherwise, I am the holder in due course. The holder is the holder in due course. Keshav Thakur, you are making a nice comment there, which is interesting. You are right. See, bill of exchange is one type of check. Check is one type of bill of exchange. No doubt about it. Check is one type of bill of exchange. Check is a bill of, but it's a special category of bill of exchange. So, as you write, bill of exchange is a wider set, of which check is a subset. See, the beauty of a check is a bill of exchange, which is in which the drawee is a bank. The drawee is a bank. There is no need for acceptance. There is no need for presentment for acceptance, etc. Okay. So, it's a special category of bill of exchange. So, it is not, you are right, checks. But no, all other bills of exchange cannot be made payable to bearer. But check alone can be made payable to bearer. Even, my dear friend, checks are not made payable to bearer. You know what you do? You give a self-check. You will give a self-check. See, self means, I'll show you a self-check, then maybe you can understand it better. If you see the self-check, I'm giving you an example from my own one of my companies. This is a blank self-check. See, the check that I'm showing you is, I have signed it. You can see my signature there. It's a blank self-check. I'm just using the check. It is not a real check. It is only for, it is from Canara Bank, but this check has not been used. I'm just showing you how it is done. See, this is not a bearer instrument. This will become bearer when I endorse it. Are you able to see what's happening here? This is a bill of exchange payable to me, self. So I'm telling the bank, pay me. And I have not crossed it. So technically, I have to go. Technically, I have to go to the bank, present the self-check and take the money. Once I fill up the rupees and all, I'll take it up. Now, what I have done here, I have turned it, and again, see, this is from a company where I'm a authorized signatory, which is for some, don't worry about that. This is a company, private limited company. I am signing as an authorized signatory. Doesn't matter how and how. So again, I'm using the same method, and now it's blank. So it is endorsed in blank. Are you able to understand? This check is negotiated in blank. Now this becomes a bearer instrument. How? Anybody who is in possession can take it, and they will sign on top, or they will write their name on top, means this becomes a order. Endorsement in blank. This is how bearer checks. Otherwise, bearer checks will not be given. Okay. But here we have said self or bearer. Self or bearer. That means what? When that person goes there, he is the bearer now. He will sign. The bank will ask him to sign there. Take the money and go. So this is how blank checks become bearer instrument. So just to give you an example, I'm showing this to you. Don't think that it is simple way now. This is how a self check would be done. if you do, we don't give blank checks. Or what you do, you write a check payable to Mohit Agarwal, or bearer. Now Mohit ji has to turn the check, sign it, and give it. That's all in blank. That means what? Mohit or bearer. Na? Any bearer can go sign and take it and go. No problem. Okay. So that is how you make. Checks alone can be made payable to bearer. Please understand. Normal other bills of exchange cannot be made payable to bearer. Got it? Please be careful about this. You're all very hung up on this bearer thing. I don't know why. There's nothing great about bearer. Just bearer means the identity of the person will not be known. That's all. In India, we cannot afford that because the identity of the person is very, very important. Therefore, promissory note and bill of exchange normally cannot be the bearer. Check alone for some limited purpose, it can be the bearer. Believe me, suppose you try that stunt and you put a check for 50,000 rupees and that bearer takes it, his PAN number will be asked. Without giving PAN number, he cannot take cash. Okay, so be careful. In India, we are more worried about money laundering than anything else. No limit. I have not put any limit. This is an example check I showed you. That check is in my safe custody. What I showed you, thereafter it has been cancelled and put in my checkbook. Just for your, I see that check leaf was freely available. That is why I am not, that account is not used much. So I told my office, my secretary, bring one rarely used bank account ka check so that I want to show some example to my students. So she got this check leaf. So we created this example for you. Then it got cancelled and she put it. No limit. Why should I put? See, all this limit and all is a stunt. Yeah, there's no need for all this. When you are writing a check, please put the amount there. What is your problem putting amount? Why put up to and all? Put the exact amount. Put the exact amount so that nobody can have any doubt about it. See, it's only when there are some unnecessarily people indulge in games only, all sorts of problem happens. Be normal. Do the normal things. You won't have any problem. Unless there is a need for you to do, then comply with the law and do it. That's all. Why issue check which is having limit and all that? I don't see a reason. Sorry. Today, one gentleman came to my office. 194Q, he is raising a bill and he himself is deducting 194Q TDS in the bill and sending the bill. Why? 194Q is a TDS provision. That he is the seller. Okay, purchase for the other party, it's a purchase. That fellow only should deduct and then pay the balance and to him and remit it to the government. This fellow in his bill itself is reducing 194Q TDS and all. Why? See, sometimes too much knowledge is also a dangerous thing, my dear friends. Too much knowledge is also a dangerous thing. Or rather, too much application of knowledge is a dangerous thing. Okay, don't worry. Chalo, we have done all this up to here we have come. From now on, we are going to get into some little bit complicated area, little bit. We have seen privileges of a holder in due course. Let me start here again. For the sake of clarity, I'm going to explain 42 again. Suppose a bill of exchange is drawn on a fictitious name and payable to the drawer's order. An acceptor of the bill of exchange is not relieved from liability to any holder in due course claiming under an endorsement by the same hand as the drawer's signature. This, if you read the text, it will be very difficult for you to understand. Let us see the example. Now, please understand, X is the drawer. I am now explaining section 42. This content will be there in your Institute Ka material, but I am trying to explain it to you. X is the drawer. But he is not drawing it in his own name. In the bill of exchange, he is not drawing it in his, let's see the bill of exchange format so that you will understand what I am saying. One second. Give me 1 minute. Sorry, I am jumping up and down. I know it's a little difficult, but no, bill of exchange format is not there. See, he is drawing the bill of exchange. He is the drawer. So what you should put X now? Instead, what he is doing, he is putting M, fictitious name. He is putting Z, fictitious name. So the acceptor knows, please understand, the acceptor knows that the drawer is X, but that he has made it as drawn in the name of Z. Now he is making it payable to X or order. He is drawing into this guy, X is drawing it as if he is Z and making it payable to order of X, that is X or order. Then this X endorses that and delivers it to M. Now M is the holder. M is the holder. Are you able to understand? So a bill of exchange is drawn on a fictitious name. There is no Z, but it is drawn by Z, who is not there. And on this Y, who is the acceptor, right? And Z is a fictitious name. Now X is the drawer. Now that bill says X or order to the drawer's order of X. Now order means I can endorse it. So X is endorsing it and X is giving it to one M. Now M is a holder in due course. M is a holder in due course. Okay, he has got it for consideration in good faith without knowing that whether Z is fictitious or not, he's got it, holding it. Now, the acceptor, Mr. Y, knows that there is no Z, it is X. Now, question, can he come now and say, no, fictitious name, it was drawn in a fictitious name, I will not pay? No. When a holder in due course is claiming under an endorsement by the same hand as the drawer's signature, the acceptor cannot allege that the name was fictitious. So long as it is payable to X's order, right? Now, if that signature of endorsement is tallying with X's signature, fact that the bill is drawn in the name of a fictitious person or fictitious name cannot be a ground for refusing to pay. The acceptor cannot allege that the name was fictitious. So this is what it means. Okay. So hope it's clear. I'm doing my best to explain this to you. And one more thing you will understand, whenever I am explaining something a little complicated, immediately I use a diagram. Now, using diagrams is one of the best things you can do in law, because law paper involves a lot of logic. Logic means you have to think clearly. And many times as human beings, we think very clearly when we use diagrams. Instead of using abstract words, when you use diagram, it's easier. So with this diagram, to an extent, you are able to understand. In fact, there will be other similar examples from the Negotiable Instruments Act, wherein I'll be using diagrams to help you. And a holder of negotiable instruments who derives title from a holder in due course has the rights on the instrument as that of the holder in due course. See, in other words, an instrument passing through the hands of holder in due course is eliminated from all defects. Let us understand it. Maybe with a single diagram, I will try to explain it. Trying my best to explain with the diagram. Let us see. See, my dear friends, drawer, right, has drawn the bill on drawee. Payee and drawer have committed a fraud. Payee and drawer have committed a fraud based on which the drawee's acceptance has been obtained. So payee knows that there is a fraud. So drawee has accepted the bill, but fraudulent, that has been obtained fraudulently. So we can say that the consent of the drawee has been obtained through fraud. So it's not free consent. So as between drawer and payee and the drawee, there is a dispute. Drawee can always sue the drawer and the payee for fraud, recovery, everything. In the meantime, that instrument, that negotiable instrument accepted by the drawee has been endorsed by the payee to endorsee 1. Okay, so the payee is not a holder in due course. Kyun? Because he knows that there is a defect in the title of the drawer. He knows that the drawee has accepted without free consent, that fraudulently has been induced to accept the bill. You got it now? Now the payee is not a holder in due course, but he receives money from endorsee 1. So endorsee 1 has paid good consideration, has taken it before the date of maturity, and has obtained it in good faith without knowledge of any irregularity in the matter. And the document is clean. Everything is pakka, no effacement, nothing, no material alteration, nothing. Then NRC 1 is a holder in due course, though the payee is not a holder in due course. Now, please understand the magic now. The minute that instrument comes to NRC 1, he thereafter endorses it to NRC 2, he gives it clean. NRC 2 gets it clean and he becomes a holder in due course. So once an instrument comes into the hands of a holder in due course, the instrument is cleaned. The instrument becomes clean. So a holder of a negotiable instrument who derives title from a holder in due course has the rights on the instrument as that of the holder in due course. Now in our example, A, B, C, D, let's go back. I just used the diagram again to help you. Now, dryer, dry. Now NRC 2 can sue everybody. NRC 2 can sue everybody. NRC 1, payee, dryer, dryee, everybody can be sued. First, primarily, he will sue the dryee because dryee is the principal debtor. Okay. But in case there is any issue, he can go to the NRC 1, payee, dryer. Now, the dryer and payee are frauds. They would have run away. Still, the drawee is liable. NRC 1 is liable to NRC 2. Are you able to understand? Now, payee, the endorser, cannot sue the dryee. Are you able to understand what I'm saying? Because he is not a holder in due course. That is the point you have to understand. So a person getting title through a holder in due course has the same rights on that instrument as that of the holder in due course. A holder who received from holder in due course takes it free of all defects. Now see this line, very, very important. The holder may have knowledge of the defects, but he should not be party to them. For example, NRC 2 is aware that dryer and payee have committed fraud. He is aware, but he was not party to the fraud. He is aware. Maybe he came to know about it in the mandi. NRC 1 is innocent. NRC 1 got it free. He thought everything is fine, believed the payee and took the endorsement and gave money for it. Now NRC 2 also gave money for it. He may have knowledge of the defects, but he has not been party to them. Then section 53 says he can get the same rights as that of the holder in due course. So very interesting point. Now, when a negotiable instrument has been lost or has been obtained from any maker, acceptor or holder by means of an offense of fraud or unlawful consideration, a possessor who claims through the person who found or so obtained the instrument is not entitled to receive the amount due from such maker, acceptor or holder or from any party prior to such order. However, a possessor or an endorsee who is a holder in due course is entitled to receive the amount. So this is only an extension of this concept. A holder cannot claim, but a holder in due course can claim, which is why I told you now under section 58, payee cannot claim because he is a holder, not a holder in due course. It has been obtained from the acceptor by means of fraud, offense of fraud. So, by means of an offense, it could be anything, or fraud. In this case, in my example, the payee is also party to the fraud. Means he also was actively conniving with the dryer and committing the fraud. They obtained the bill of exchange. Now he has endorsed it to NRC 1. Now, the holder cannot claim. Are you able to understand? The holder cannot claim. Okay. But if the holder in due course can claim, he is entitled to receive them. So the holder in due course gets a lot of privilege. It shall be presumed that the holder of a negotiable instrument is a holder in due course. We already saw 118, we already saw. Where a suit has been filed by a holder in due course on a negotiable instrument, the maker, dryer, or acceptor for honor shall not be permitted to deny the validity of the instrument as originally made or drawn. They are stopped from denying the original validity of the instrument. See, they cannot at that time come and say there was a fraud bought and all. Boss, he is a holder in due course. He has got the instrument. Instrument is valid, dated, signed, properly done. Pay. Acceptor has to pay. Drawee acceptor has to pay. Or every endorsee before him, the prior party has to pay. If he can get hold of the dryer and the fraud persons, now they also have to pay. But how to catch them? That is different. But everybody is included in that. To the holder in due course, everybody is liable. But holder, no. Okay. So in our example, I hope you will understand that NRC 1 and NRC 2 are holder in due course. Whereas the payee who is party to the fraud is only a holder. He is not a holder in due course. Holder in due, no, Mayur Gupta ji, we have already defined holder in due course elaborately. Don't use simplistic statements, please. No, don't use simplistic statement. Please, you go back and study from the material. See this. Holder in due course is not a simplistic one-line definition that you can give like this and go. Holder, see, holder is a person in possession. Please, if you are having doubt, I'll go through it again. Holder means a person entitled in his own name to the possession and receive. And should be a person entitled in his own name to the possession, which means that his name should be there, or he must be the bearer. He must be entitled to receive a record. Now he will become holder in due course only when he has obtained it for consideration. Or you can see in our example, the payee has not obtained it for consideration. Between the payee and the drawer, there is no consideration. Simply they are colluding in the fraud of the acceptor drawee. Therefore, he is not a holder in due course. Whereas NRC 1 gave money for consideration, and he is the endorser or payee, payable to order. And before the amount mentioned on it became payable, he got it. And without sufficient cause to believe that any defect existed in the title. Only if all these conditions are satisfied, he will become holder in due course. So your statement is very, very simplistic. Don't give such statements. Maximum you can say holder. What you have told is holder. Holder, you can say that. Holder is a person whose name is mentioned in the instrument as a payee or as an endorser. He is entitled in his own name. But he is not a holder in due course until he shows that he has paid consideration and he is without knowledge of the defect in title. See, this is a very, very important distinction, Mayurji. If you have not understood it, now at least I hope you have understood the distinction. And kindly please confirm that you have understood it, because I don't want you going out of my class with a wrong idea about the subject. Okay, please. Have you understood the difference between who is a holder and who is a holder in due course? Even in this example, you will understand better. See, payee and drawer, I said, have committed fraud. Now tell me, is the payee a holder in due course? No, because no consideration, aware of the defect, correct? So he is not a holder in due course. But NRC 1 is a holder in due course. Yes, he is entitled, he is mentioned as NRC, he is in possession, and also he has paid consideration and he has received it without knowledge of the defect. Now he endorses it to NRC 2, who gives consideration and takes it. But now comes the thing, since it has passed through a holder in due course, the subsequent NRC, he may be aware of the defect. So long as he is not a party to it, there is a why pay consideration? That's unless you pay. See, in this case, without consideration, they have defrauded. So some money should be involved in it. Either you should have paid money or supplied goods or something you should have done. Okay, why pay like that? If you ask me, you have to go and ask Mansfield only. What do you say, Mohit? You have to go back in a time machine, catch hold of Lord Mansfield and ask him, why you have told like that? This fellow Srikanth is telling for consideration. Why you are telling like that, Mansfield, like that? You have to ask Mansfield only. Because idea is, boss, if I take a promissory note from you, will you give me just like that, Mohit? Will you give me a promissory? Will you sign a promissory note for 5 lakhs? Unless I don't give you either 5 lakhs or something worth 5 lakhs or some obligation which according to you is worth 5 lakhs, something should be there. Otherwise, so if you're doing it means what? I'm cheating you. That means that you have made it without consideration. I have received it without consideration. So I am a holder, but not a holder in due course. You got it, G? Still, if you are having doubt, why pay consideration, then you are able to understand. See, one more thing, go back to your contract act. Shouldn't there be consideration? Every promise should be supported by consideration, right? That is the point. Okay. Thus, that is why we are saying all holders are presumed to be holder in due course. The presumption is that this fellow obtained it for consideration in good faith without knowledge of liability. Now, I am the person who is denying my liability. Now, I have to prove that he is not a holder in due course. It is now in my hands as Say, maybe I'm the drawee or acceptor and saying, no, this fellow is not. They cheated me. He's also a party to it. He is aware of that. No, it's up to me to prove that you are a holder and not a holder in due course. But if you produce the instrument, you are presumed to be the holder in due course. See, that way the law is very fair. Thank you, Mohit. Boss, no. This is, again, you have to go back to Mansfield. See, some questions, I think I should keep Lord Mansfield along with me while conducting this lecture. Because what Mansfield is saying is, the holder may be the subsequent NRC, who takes it from a holder in due course, may have knowledge of the defects. But he should not be a party to that fraud or whatever it is. Okay. So, no, this is the exception. This is the exception. A person who receives it from a holder in due course becomes a holder in due course by definition. This is an exception to the general rule that the holder in due course should get it without knowledge of it. See, as between, I think I have to keep on going back here. If you want to take a photograph of this and keep it. Sorry. See, NRC1 is a holder in due course. How? Though the pay's title is weak, he's got it by fraud. NRC1 got it free because he never knew about it. Now, the minute it goes into the hands of a holder in due course, the instrument gets cleaned. So subsequent NRCs get it as if they are holder in due course. Only concession given by our friend Mansfield is, he says, hey, this guy may have knowledge of it, but he should not be a party to it. That's what he's saying. There's a slight difference between having knowledge of the defect and being a party to the defect. Are you able to understand? See, that way negotiable instruments, now, if you think clearly, it is a simple subject. No, there's no need for you to think. And whatever doubts you have, you raise it. I will clarify it. Now, Abhito, don't postpone. Now we'll clear it. Take notes also of whatever I'm saying. Later on, COL, I will send you this notes along with meetings also. Management and administration also. I will upload the PDF now. Download it. Keep it with you. If you have further doubts, please raise it. We will be more than happy at Board of Studies to answer your queries. Correct. Keshav Thakur is going back to his contract time. Chalo. Now. So, at last we come to an end to holder in due course. Friends, this holder in due course and all, very important from the exam point of view. That is why I'm again and again dinning it into your head. Who is a holder? Who is a holder in due course? Who is a holder? Who is a holder? Only exception is 53. Don't confuse. 53 is an exception. A person who gets title through a holder in due course takes it free of all defects. So, the holder in due course, coming in between, can clean the instrument. The holder who gets it from a holder in due course may have knowledge, but he should not be a party to it. Is these diagrams there in your... Definitely, it will be done as a PDF. All these diagrams will be there. Why I told you to take a photograph? Not because it won't be there, but because frequently I have to keep turning. And sometimes I may push through it later on. If you take a photograph of this slide alone in your mobile and keep it, later on when we are having some other problem discussion in today's class, you will find that it is easy to understand. This life cycle of a bill of exchange diagram, if you can see, now you are taking photograph now. Later on, you should take the photograph in your eyes and put it in your brain. So that any problem on negotiable instrument, put it into this format. On bill of exchange, you put it in this format, you will find it is easy to answer. When the problem is done, they'll give you abstractly, they'll give you names now. Draw this diagram quickly as a sketch. Put the names correctly in the place. Drawer, drawee, payee, and suddenly your answer will come to you. You will immediately get the answer. I'm telling you. Okay, so that is why this diagram becomes very, very important. It will definitely be there. When I am sending it to you, it will be there. Don't worry. Okay. Now we move on from holder and holder in due course to types of instrument. So, inland instrument. Inland, foreign. Inland means India, within India, made in India. Okay, make in India, made in India. I don't know. Okay, but foreign means having some foreign connection. So a promissory note, bill of exchange or check, drawn or made in India, and made payable in or drawn upon any person resident in India is an inland instrument. Both are in India. Bill, it is drawn in India. If it is a bill of exchange, it will be drawn. It is drawn in India or made in India. Promissory note made in India. So I am an Indian, you are an Indian. I sign a promissory note. I am making a promissory note in India. I am making it payable to you who is in India, resident in India, inland instrument. Or it is made payable in India or drawn upon any person resident in India. Then automatically it is an inland instrument. Please note, made payable in India. It may be payable to a person resident outside India or foreigner. But payable in India, then inland instrument. Drawn in India, payable in India, inland instrument. Drawn in India, drawn on a person resident in India, inland instrument. The payee may be a foreigner, no problem. So long as it's payable in India. If the bill of exchange is drawn, the payee may be a person resident outside India, but it should be drawn upon a person resident in India. Then it is inland instrument. So, you should first of all ask, where is it drawn or made? In Nagpur, India. So, tick. And also, and please note, my dear friends, please note the significance of the word and. And. Why? Because both the conditions should be satisfied. Now you see, who is the drawee acceptor? Indian. Tick. If it is a bill of exchange. Then, is it payable in India? Yes. Don't worry about payee. He may be outside India, no problem. But the payment is to be made in India. Look at the drawee. Is person in India? Then no problem. Resident in India, no problem. Inland instrument. Foreign instrument. Bill drawn outside India. The bill itself is drawn in Hong Kong. The bill is drawn in Hong Kong. On a person resident in or outside India and made payable in India. See, my dear friend, suppose the bill is drawn outside India, made payable on a person resident outside India, made payable outside India, boss, we have nothing to do with it. Our law cannot control it. Are you able to understand? Bill is drawn outside India. Let us say bill is drawn in Hong Kong. On a person resident in Hong Kong. Payable in Hong Kong. Who are you to make law for that instrument? That is an inland instrument in Hong Kong. Are you able to understand? Some Indian connection should be there. Then only you can call it as a foreign instrument from the Indian perspective. So the bill is drawn outside India in Hong Kong. It can be drawn on a person resident in or outside India. Let us say that the bill is drawn outside India on a person in Hong Kong. Still, one more condition. And made payable in India. So, one Hong Kong company person is drawing a bill on a Hong Kong. But the bill is payable in India. Are you able to understand? Or Hong Kong fellow is drawing a bill on an Indian. Payable in India. Both the payable in India is very, very important. If it is payable in Hong Kong, sorry. Okay, two conditions are there. Drawn outside India, payable in India. Draw on a person resident in or outside India, doesn't matter. Payable in India. Bill drawn outside India on a person resident outside India and payable in India or outside India. Somewhere you have to have some Indian connection. Otherwise, there is no point. Okay. So, payable in India or outside India. Now, that is a foreign instrument. Foreign instruments, see, the second example is a pure foreign instrument. Our law cannot control it unless it is payable in India, in which case we can control it. Okay. And made payable in or drawn upon any person resident in India. There should be a connection in India. So, you can make it, you can draw it on a person in India or outside India, but it has to be made payable in India. Okay. Otherwise, it cannot become a foreign instrument. Inland instrument, no foreign connection. It is drawn or made in India and made payable in India or drawn upon any person resident in India. Here, some foreign connection is there. Either the bill is drawn outside India and made payable in India, or Bill is drawn in India, but outside India, and made payable outside India on a person resident outside India, right? Now, we saw inland and foreign instruments. Now, demand instruments. Checks are always payable on demand. Do you notice the definition of check is payable otherwise than on demand? Not payable otherwise than on demand. Always payable on demand. Whereas bill of exchange or promissory note can also be payable on demand when it is expressed to be payable on demand at sight or present. Usually, promissory notes are also on demand only. On demand. On demand, I promise to pay. On demand means what? Whenever it is demand. At that, the minute he comes and asks, you have to pay. Okay. Of course, you can also make it payable after a date. But when it says on demand, he can come and take it any time. Sir, payable should be in India, sir. It should be made payable in India. Okay. Only then it becomes a foreign instrument as far as Indian law is concerned. See, there are three categories here. One is bill drawn outside India, person resident in or outside India, made payable in India. Second is the example I gave now. Bill is drawn outside India, person is residing outside India, and payable outside India. Or it can be made payable in India. Right? Now, so the second category is a pure foreign instrument. We have no connection. It is drawn outside India, on a person residing outside India, and payable in India or outside India. Right? Please understand, in the second category, the person drawing it is an Indian. It is drawn outside India, on a person residing outside India. It can be payable in India or outside India. But the person drawing it is an Indian here, in the second example. Here, it is drawn outside India. Okay? On a person residing, made payable in India. Here it is made payable and payable in India or outside India. Okay? So, either way, there should be some Indian connection for me to make it a foreign. So, that is what it is. Checks are always payable on demand. We already saw that. Time instrument. A bill or note which is payable after a fixed period or after sight or on a specified day. For example, a promissory note can be said on so-and-so date, I promise to pay. Okay? Or I promise to pay Mayur Gupta a sum of rupees 5 lakh on so-and-so date. That is a time instrument. On demand, if I promise to pay, it is a demand instrument. Or you can say after sight. That means what? The bill is presented for acceptance. That is called sight. From that day, you say 30 days after sight. That means you present it for acceptance. He sees it, signs and accepts it. That is the date of sight. Means he saw that sight. From that day, count 30 days. And then you have to count grace days also. We'll come to that. And that on the plus grace day only, it will be due. That is called maturity of the instrument. On-demand instruments, no date of maturity. It will be maturing the minute it is presented. But after that, grace days are there. But time instrument, it will mature only on the date mentioned. Either on a specified day or I promise to pay Mayur Gupta a sum of 50,000 3 months from the date. From date. Means 3 months from the date of the bill. Answer and note. So I'm signing it now on the 13th of September. Then 3 months. October, November, December. 12th of December, note will become due. So it has to be, see, any person presenting should present it before that date. After that date, still the instrument is valid. But it has to be protested and then only paid. Okay, it is still due. Now, we'll see that when you come to maturity of a bill. At sight on presentment means on demand. Now think about it. Once again, payable on demand after 7/30/23. No. Hello, Ji Darshan. Why are you combining two? Payable on demand. Why say on demand? Hello, brother. Why say on demand? On demand means the minute I come and show you, you have to pay. You understand? At sight or on presentment or on demand means immediately. Why are you using on demand along with the futuristic time? Okay, if you are going to be very particular, I will say payable on demand after September 30 to 2023 is a time instrument, but a very, very bad time instrument. You know why? Because this is a perpetual instrument. The way you drafted it, it is a perpetual instrument. It will never have a maturity date. You'll understand why I am saying the way you have drafted it, payable on demand after September 30, 2023 is a perpetual instrument. It can be presented any time. Till Pralayam it can be presented. Because after September 30, 2023, any time, any donkey can walk in and on demand you have to pay. You're able to understand? So I don't think you should word it that way. If you want it to be payable on September 30th, my dear friend, you simply say payable on September 30th, 2023. Or say payable on September 30, 2023. That is correct. That makes it a time instrument. Payable on a specified day. But why put on demand? That too after. So he will come any day, he can come. Or if you want, you put payable 30 days after sight. No problem. Payable 30 days after sight. That means what? The bill is presented for acceptance. From that day, 30 days will be counted after sight. No problem. Okay. Unfortunately, law is logical subject. I hope we have been spending a lot of time together, me as a teacher, you as students. Sometimes I have also been a student. I have learned from you. I hope one thing you understood is law is logical. See, sometimes if it's a blackboard, I will write on the board, but here I don't have the board facility. So I'm going to write here. The word law, are you able to understand? Logic of law. I call it logical. The reason I tell this is because sometimes the normal logic doesn't work in law. Law has its own logic. Okay. What does it mean? It means clear understanding of the sections more than the words of the section, the purpose behind the section. Okay. Now, very, very important. The maturity, very important. This is very important. Please concentrate, because in the exam, they will give you some date and ask you to calculate maturity. So they'll say a promissory note is drawn on 13th September 2023. Made payable after 30 days. So made payable after 30 days. Now, so you have to count 30 days. Now, it is not on demand. It is made payable after 30 days. So a note or bill which is not expressed to be payable on demand. If it is expressed to be payable on demand, straight away. Okay. But if it is not expressed to be payable on demand, at sight or on presentment, is at maturity on the third day after the day on which it is expressed to be payable. So what I have told, within 30 days, or let us go by our own example, your own example, Darshanji. You are saying September 30, 2023. So the promissory note is payable on September 30, 2023. Agreed. So it will not be payable on September 30, 2023. It will be payable on the third day after the day on which it is expressed to be payable. So 30 over and up, September 30 over, 1, 2. You have to pay it only on 3, on the third day. One more thing you have to do. In calculating the date at which a promissory note or bill of exchange made payable at certain number of days after date or after sight or after a certain event is at maturity, the day of the date or of presentment for acceptance or a protest or for a non-acceptance or which the event shall be excluded. See, they are saying, now when you are saying it should be taken 30 days after sight. Now you have to count 30 days. Now, so the date of presentment is important. Now, the day of the instrument or You can say 30 days after date or 30 days after date after sight. So the day of the date of or a presentment for acceptance or sight, etc., on which the event happens shall be excluded. So next day onwards, you have to, right? From the next day, you have to count 3 days for the grace days. So Darshan's bill is falling due on 30th September. Exclude that. 1, 2, 3. Okay. Suppose that day is a public holiday. What do I do? It will be due on the actually it should be next succeeding business day. Sorry. It should be it's due on the next preceding, I think it should be succeeding business day. The day on which it became due is a public holiday. Then on the next succeeding business day, right? There is some confusion in it. I'll do one thing. This is where, whether it's preceding or succeeding, there's a doubt. You know what I will do? I will straight away go to the Negotiable Instruments Act itself. This is the Negotiable Instruments Act. Okay. And I am now searching for 25. This is section 25. I'm reading section 25. When the day on which a note or bill of exchange is at maturity is a public holiday, the instrument shall be deemed to be due on the next preceding business day. Preceding means 1 day before. So what you need to do is, in case the bill of exchange or note or bill of exchange is maturing on a public holiday, you should take 1 day before that, which is not a public holiday. 1 day before that. That is the intention of Lord Mansfield. So the word preceding is correct. It is there in the Bear Act also, correctly included here. The meaning is that, suppose it is falling due, let us say on the 15th of August. 15th of August is a public holiday. Therefore, you should take it from 14th of August. The grace days also will be counted from that date. Okay. In case the 3 days are counted and that day is declared as a public holiday, then nothing, you have to go on the next day only. But if the maturity date you are calculating and it falls on a public holiday, then you should take the preceding business day. Next preceding business. Preceding means coming before. Okay. Now we are going to the word negotiation. After all, this law is called negotiable instrument. What is the beauty and greatness of negotiable instrument? Once the negotiable instrument is duly drawn and accepted or made by the promisor, the promissory note, the maker has signed it. In the case of a bill of exchange, the drawer has drawn it on the drawee has accepted. The negotiable instrument gets the life. Thereafter, that instrument can be transferred by endorsement and delivery. Where the instrument is payable to bearer, it can be transferred by mere delivery. By mere delivery. Believe me, only one type of instrument can be made payable to bearer, which is check. All other instruments cannot be made payable to bearer. But if it is payable to bearer, the right to receive money under that instrument can be transferred or negotiated by delivery. Delivery may be actual. That means I may give it to you, or by constructive. I may give it to your agent. No problem. If I don't give it to you, so long as I give it to your duly appointed agent, it is as if I have delivered it to you. Right? Now, okay, so Darshan is confirming the view that he has also learnt it similarly in accounts. I am very happy about that. Suppose the bill drawn on 2nd September for 30 days after sight, and Mr. X received the bill on 4th September, but he accepted the bill on 5th September. It's drawn on 2nd September for 30 days after sight. Okay, sir. Mr. X received the bill on 4th, but he accepted the bill on 5th September. Then from which date? So date is mentioned. What is the date mentioned? Receiving the bill is one thing. What is the date mentioned in the bill as date of acceptance? If it is 5th September, we have to start only from 5th. Date of delivery, no. Which is one of the presumptions, my dear friend. One of the presumptions. in case that fifth, see if the acceptance, if the date of acceptance is noted as 5th September, then it is only 5th you have to count, not 4th. He might have received it any day. He accepted it only on 5th. From that date only you have to count 30 days. Okay. Good question, but interesting question. But date of acceptance should be noted. Okay. Otherwise, the whole thing becomes a proof. Did you deliver on 4th? Do you have any proof like that? Okay. How do you prove that he received it on 4th? You have to start thinking like that. Whereas he accepted it on 5th. So that is confirmed. That is the date on which we have to be sure. From that date, you have to count 30 days. One more thing, he may take that bill and keep it without accepting. That day cannot be date of acceptance. The actual date of acceptance is only 5th. That has to be taken. Where instrument is payable to the order. That means you can say, you can endorse it. That is, you can write my name and sign. That means it has been endorsed. Then you can't keep it in your pocket. You have to give it to me. Only then it is endorsed and delivered. Endorsement and delivery. Please note, all this is subject to 58, where an instrument is obtained by unlawful means or by unlawful consideration. Okay, we'll see that. Delivery of an instrument is essential, whether the instrument is payable to bearer or order for effecting negotiation. So whether bearer or order, delivery is important. If it is an order, then endorsement is also needed. Inchoate, okay, since you are asking, I'll explain it. Sir, I'll explain now inchoate and ambiguous. Sir. Inchoate means something is missing. Inchoate means something is missing. Either the name of the payee or the, shall we say, the amount or the date. But sign should not be missing. Hello, the drawyer should sign, the drawee should accept and sign. All that cannot be missing. But something else can be missing. Okay, like amount can be missing, or that is called inchoate instrument. Usually where the amount is blank, or a date is not there, or the payee's name is not mentioned, we call it inchoate. In some way it is incomplete. In some way it is not complete. It's called inchoate. Inchoate instruments are possible. In which case the amount will be filled up. Suppose there is a cap on the instrument, then holder can claim only what was the original consideration on the instrument. But holder in due course can claim the amount up to which the instrument is stamped. Suppose the bill of exchange is stamped for a particular value, but the amount is not mentioned in the bill of exchange. It is an inchoate instrument. So any person who receives it can fill up the amount up to the stamp value of the instrument. He is a holder in due course. But the holder can only fill it up for the amount actually undertaken or the contract value. Will what be valid? It will be valid. So long as signature is there, it will be valid. Again and again, I'm telling you, give blank check. I have no problem in taking. It can be blank everywhere except your signature. Please give it to me. I'll take it and run away. Just take your checkbook, sign it and give it to me. It is an inchoate instrument. I will fill it up. Don't worry. But if you don't sign, then what is use? It is not, that is not blank check. That is called blank. That's all. Okay. With only one single job you have to do. Sign it for me and give me. That's all I'm asking. You saw now that self-check which is there now and endorsed in blank. That's an inchoate instrument. If you get it, you fill your name there, Mohit Singh, and then you go to my bank, present it, take the money and go. But if you're going to take more than 50,000, your PAN number will be there. Give a false PAN number, take it and go. That's all. Okay. Now, ambiguous instrument. See, I am the dryer. Okay. You are the drawee. I am drawing the instrument on myself, let us say, for example, and endorsing it and giving it to you. It is nothing but a pro note, yeah. It's an ambiguous instrument where the dryer and drawee are the same, okay, or the dryer and payee are the same. It is nothing more than a promissory note. Are you able to understand? So, those cases of ambiguous instrument, the holder in due course or anybody who comes into possession can presume whatever they want about it. Both are valid. Nothing about the validity. The rights are there. You have to be careful about the rights. I hope I have explained it to you. Delivery of an instrument is essential, whether the instrument is payable to bearer or order. The delivery must be voluntary. And the object of the delivery should be to pass the property. Property means right in the instrument to the person to whom it is delivered. Delivery can be actual. Actual when it's physical. When constructive means it is given to the agent or clerk or servant of the endorsee on his behalf. Okay. Or when the endorser, after endorsement, holds the instrument as an agent of the endorsee. See, the trust is so high. So the endorsee says, hey, you endorse it and keep it, man. Keep it as my agent. Give it to so-and-so when they come. Then, once it is endorsed in favor of the endorsee, it is still in the possession of the endorser. But now, he is holding it as an agent of the endorsee, not in his own right. So, that is also constructed. Basically, constructed delivery means it is not given to the person physically. It is given to somebody else, like an agent or a clerk or a servant. See, clerk, servant, everything is one and the same. So please don't ask that question. So our clerk and servant only. Clerk is also servant. See, slight differences. Clerk is an employee. Servant means, see, for example, I send my peon, driver, they take it. Servant, I send my manager or somebody from my executive from my office. Clerk, slight difference. Whoever it is, he is receiving the instrument on my behalf. Okay. Once the instrument is given to me, given to him, delivery is completed. Okay. This topic is closely linked to your agency, powers of agent, okay, duties of agent and all. When the see how it is done, I already mentioned it to you. I already told you how this is done. You take the instrument, you reverse it on the back or face or on a slip of paper annexed thereto called allonge. You simply sign. Mention the name of the endorsee if you want. Otherwise, simply sign. If you mention the name of the endorsee, it is full endorsement. If you do not mention, blank endorsement. Got it? So, person endorsing is called endorser. The endorsement of a negotiable instrument followed by delivery transfers to the endorsee the property therein with the right of further negotiation. Okay, so once this is done, it becomes that paper can now travel. It can create money. As it travels, it will generate. That way, if you just think one day calmly and think about how it is, how the merchants have been so intelligent, they have used this. And so by just pieces of paper based on trust, they have done. This is what later on became money, right? Now you are willing to accept a promissory note from the RBI governor and you call it money. You're calling it 500 rupee note. So, Varshaji, I just joking. Don't take me very, very seriously. False PAN is not possible. Bank will check online immediately. If they do that, I'll be very happy. I can tell you stories of fraud committed in private banks where a person has opened an account by giving false PAN number. In forensic audit, we have seen so many things. Collusive fraud. No problem. Just joking. Mohit is not such a person who will take a blank check and do anything. But see, basically, I'll tell you one thing. Suppose I sign on a check without putting amount and give it to somebody. Whose fault is it if something wrong happens? First of all, the person like me who is a fool, signing blank check and giving is the first cause for fraud. In any fraud, there will be a fool somewhere in the middle. Are you able to understand? Any fraud, whenever I've investigated fraud and reported it, somewhere there was a fool in the middle. When I say fool, I'm being very careful. That fool trusted people. Later on, when we caught him, he will cry. He will say, sir, I trusted that fellow, sir. I signed everything and I gave it to him, sir. That man is the true perpetrator of the fraud. So the conclusion I'm getting is, once you become an important, responsible finance professional, please do not work on trust. You do as per procedure. Don't give blank. Don't share your user ID password. Don't share access codes and all. However, unless the trust level of that person should be extremely high, like level 9 trust. Okay, that gentleman should have worked with you for 9 to 10 years. And there should be no other grounds to suspect all that. If you have, then some cases, rarely you can. Otherwise, don't. When a user ID and password have been given to you, it is yours. Do not share it with anybody. Or have some other control on the transaction. Something. So that without your knowledge, nothing can be done. Otherwise, believe me, the person who trusts is the person who creates the opportunity for the fraud. Thereafter, somebody intelligent takes over and they betray the trust and they do. This topic of negotiable instruments now will become very relevant to you if you are specializing in forensic audit. Because bank frauds today are all negotiable instruments fraud only now. Think about it. That's why instead of only saying signature, I also used one important word, user ID and password, PIN. These are all very important numbers and codes, never to be shared with anybody. Or if you're going to do it, have one more control on the transaction. See, level 9 is an example I gave you, Darshan. Just a way of putting it. Level 9 is very high. The person should be so well known to you. Level 9 trust and all, you might have maximum 3 people in your life. 2 to 3 people in your life only will be level 9 trust. Blindly you can trust. Level 9, even that 9 only. There is no level 10. See, that is why level 9 is like high degree of trust, mom. Mother, some employee who has been with you for a long time. It's rare. Somebody, you cannot have level 9 trust. You meet a guy in the train, he cannot level 9 trust. Yeah. He will start at level 0 or level 2. Level 1, level 0, he will start. You worked with him for 3 years, then maybe you will promote him. Are you able to understand how trust is built? I once ran a workshop for a very large public sector Maharatna company. Continuously about 20 workshops I ran on trust building. So trust is very difficult and it doesn't work like that. Level 9 trust is very rare. That is why an audit firm has this slogan. Even my firm, we have this slogan. In God we trust, others we audit. In God we trust, others we audit. Sometimes, clients come to me and say, Mr. Srikanth, you have to believe me. I said, look here, Baba, I am not paid to believe. I am paid to audit. You understand? So this type of a skeptical attitude, cynical attitude should be developed by you as part of your becoming a chartered accountant. This is not something you learn in the syllabus. The skeptical and cynical attitude. Of course, the skeptical and cynical attitude is only when you're doing your job. After that, you should be a normal human being enjoying life and all that. But in this case, you have to. Simple thing, Ma, when you give some money to somebody, now take a receipt immediately. Take a receipt. Nothing wrong in asking for a receipt. The guy will ask, do you not trust me? I say, it's not about trust, Baba. It's about record keeping. I may forget that date. Like that, politely you tell him something. Similarly, when somebody gives me money, I will count it. They will think, don't you trust me, sir? Boss, you might have given me 100 rupees more now. Then I will return it back to you. Like that, I will tell. I will count. You understand? I'm sorry. This may sound, some of you may think this is not correct. Sir, life is, we have to trust everybody, sir. Then maybe becoming a CA is very dangerous for you. Because you will be having control over crores of money of companies. And they will entrust it to you and give you check signing rights and all. So there you, with other people's money, no, don't play games. Have a cynical and skeptical attitude. Okay. If the endorser signs his name only, the endorsement is said to be in blank. I showed you one check leaf now where on the reverse side, what I have done, I have simply signed, not put any name. Now that is a dangerous document. It is a endorsement in blank. If the endorser adds a direction to pay the amount mentioned to or to the order of, or just mention the name of the person, then the endorsement is said to be in full. So I take a promissory, I take a bill of exchange. I am the payee. Now, drawer has drawn, drawee has accepted. After acceptance, I am entitled, I am the payee. Or even before acceptance, I am the payee. I take it. On the reverse side, I write Mohit Singh, signed Srikanth. Now, Mohit becomes the endorsee and holder in due course. Provided its consideration, blah, blah, you know that. Then Mohit Singh now writes Keshav Thakur, signed Mohit Singh. Another endorsement. Below that, Keshav Thakur signs. Are you able to understand? Says Bhumika. Like that. Keeps on going. There can be. So, at one stage, what will happen? That reverse side, there will be no space now. That is when you can attach a paper, slip of paper. That is called a launch. It's a French word, not a Latin word. In negotiable instruments alone, you will suddenly find French words are being used, not Latin words. Allonge is a French word meaning attachment. Allonge. That is, along with it, it's coming as an attachment. Allonge. Okay. So, allonge. So, that is called an allonge. It's a piece of paper or slip of paper annexed to the main instrument because there is no space on the back. So, they attach. That is called allonge. So, endorsement in full, endorsement in blank. Now, we are going to see some types of endorsements. One is restrictive endorsement. An endorsement is restrictive when the endorser, while making the endorsement, restricts or excludes the right of the endorsee to further transfer the instrument or constitute the endorsee as an agent to endorse the instrument or to receive its content for the endorser or for some other specified person. So, I'm endorsing it to you. I'm writing your name, but I'm putting some condition on you. Okay. That means it is restrictive endorsement. See some examples. These endorsements exclude the right of further negotiation by C. Think about it. Pay the contents to C only. Got it? Similarly, when I put account payee on a check and endorse it, if it is, see, the check is not crossed. It is payable to me. Now I am reversing it. And I am saying, putting your name. I'm giving examples of Mohit and all because your names are here and don't mistake me. So I write Mayur Gupta, sign, I sign. Then I take the check and I put account payee. That means what? Now Mr. Mayur Gupta cannot negotiate it. It has to be deposited only in his account and through his account, to his account only, payment will be made. So are you able to understand? Or pay C for my use. That means what? C will take the money, but not for himself, but for me as my agent. That's what this means. Constitutes the endorsee as an agent. Okay? Or pay C or order for the account of B. That means you pay C or C can say pay D, E and all, but whoever comes to you, they are going to receive it as an agent of B. Okay? The within must be credited to C. You know, in this case also what happens? C becomes the only guy who can get money on this. Nobody else. So the right to negotiate is restricted. Whereas pay C, no problem. Pay C, sign. That's all. C. Now C can negotiate it to D. D can negotiate it to E. So on and so forth. Pay C, value in account with the Oriental Bank. No problem. C can negotiate it. D to D. D can negotiate it. So long as the money is collected from Oriental Bank. That's the only condition he's putting. Negotiation is not affected. Further negotiation possible. Pay the contents to C, being part of the consideration in a certain deed of assignment executed by C to the endorser and others. Boss, all this is story. Finally, what does it say? Pay to C now. Now C can transfer it to D also. Whatever. Okay. So this is restrictive endorsement. Got it? Now conditional endorsement. An endorser may insert in the endorsement by express words a stipulation negating or excluding or limiting his own liability to the holder by making such liability or the right of the endorsee to receive the amount due thereon upon the happening of a specified event, although such event may never happen. See, any endorsement which is made subject to something is a conditional. I am making it subject to some condition. Okay. Thereby, in case the condition doesn't happen, I am not liable like that. Okay. See, in those days, all this was done. Today, in commercial transactions in India, believe me, conditional endorsement I have never seen. Restrictive endorsement I have never seen. Only standard endorsements. Sa Riku endorsement is very, very important. Sa Riku. My friend Mr. Darshan is familiar with French. I'm sure he will know the meaning of the word. And the way I pronounce it is also very important. It is not sans recours. It is sans recours. Unfortunately, a French phrase meaning without recourse. Sans means without. In French, sans means without. Recourse. Recourse means you don't have, once I put sans recours, don't come to me, go. You want it, take it. If that fellow does not pay, don't come to me. This sans recours will be very, very interesting In a short while, we'll be seeing circuitry in action. At that time, you will understand the Sareku, how important it is. Okay. So, once pay A or order without recourse to me, or pay A or order Sareku, or pay A or order at his own risk, means what? A takes it with risk. At his own risk, he takes it. Boss. Okay. We have to go back to that diagram only. What to do? The diagram is this life cycle of bill is a very, see, dryer is there, payee is there. Now NRC 1 is there. Okay, no problem. So NRC 1 is there. Now NRC 1, it's endorsing it to NRC 2 now. There he says Sareku. NRC 2 says, okay, what to do, man? You give me. See, what to do? You might ask, why will NRC 2 take it? Because, see, I'm coming to him. He owes me money. He owes me money. Okay, he owes me money. Now I want to collect from him. He says, look here, I owe you 5 lakhs. Yes, I can give you only 4 lakh 50 or 4 lakhs. Then he takes the white color and red color and puts namam on my head. 1 lakh gone. Till, okay, gone. At least 4 lakh I'm getting. Then that guy says, hey, I can't give you 4 lakh. Here is a bill of exchange endorsed in my favor by so-and-so. Dryer is so-and-so, dry is so-and-so. Are you willing to take it? I'm looking at the dryer's name, Okay, maybe they will pay me. Finally, I will present it to dry, he will pay. Or else, at least I can sue dryer and I can sue the pay. So I say, okay. Then he says, Sareku. That is, in case the dry does not pay, don't come to me. So NRC 2 says, it is my fate, man. Give me. I take it. Now, NRC 2 is taking it at his own risk. For example, suppose the dry does not pay. At the time of payment, dry is. Then the NRC 2 cannot come to NRC 1. Sareku. He cannot come to NRC 1. But he can go to the payee and the dryer. Are you able to understand? But NRC 1 is not liable. This is the effect of Sareku endorsement. Sorry to keep jumping like this. I feel bad, but what to do? So Sareku, this thing. That's why I gave you a practical example. You might ask me, so who will take Sareku, sir? I have no other option. I have to take it, Baba. It's a risk only in business. Once you get into business, it's very difficult. Mohit is asking, how come French expression? Because one more thing I'll tell you. This whole thing, this Negotiable Instruments Act, is part of the Gulf, Persian Gulf, Africa, Arabian Gulf, everywhere, where French was the preferred language of commerce and business. Okay, for your information, French was the language of diplomacy. French was the language of commerce and business. And great parts of Europe and Africa were under French influence. You got it? It's only later on that English became some sort of an important language. Till such time, it was French that was used. So here you find these words are being used. And believe me, Italian, Spanish, French, Portuguese, almost similar languages. You will not find much. Doesn't it violate privilege of a holder in due course? Yeah. If it is Sareku and the holder in due course gets it, he cannot give better than this. It won't. Boss, if you are the holder in due course, when you got it, you knew it's Sareku, no? Knowingly only you accepted it. What to do? See, doesn't mean that this cannot be negotiated. But, I mean, it's a good question, Darshan, but you have to accept. Holder in due, suppose there's a defect in title, the holder in due course can cure it. Defect in title. The holder in due course can cure it. But here, this is not a defect in title. It is a characteristic of the instrument that it is Sareku. So, if I'm a holder in due course, Sareku. I give it to you, you become a holder in due course, Sareku. That's all. We cannot go to that fellow, nothing. Other parties you can go. You can sue dry, you can sue dryer, you can sue payee, you can sue any prior party other than the guy who endorsed it, Sareku. The guy who endorsed it, Sareku, is out. Enjoy. Okay. So there is no violation. To answer your question, no, there is no violation of the privileges of holder in due course. Okay. This is not a privilege of holding. He gets it as he gets it, he gives it. That's all. If it is Saraku, I will not take it, boss. He'll be holding it. Or see, if I have no other option, I will take it from him. See, Darshan, you are sitting at home studying for CA exam. You come into the world of business. Then you will know what all compromises will be made to collect money. then you will understand why somebody will be willing to take a Saraku endorsement. At least some chances there of collecting the money. Na? Sans frais, that means cost. The endorser does not want the endorsee on any subsequent holder to incur any expenses on his account on the instrument. See, sometimes the instrument will have to be noted and protested. All that is having some cost on it. Now the endorser says, all those costs will be borne by me. All expenses on the instrument will be borne by me. So sans frais means without the subsequent holders do not incur any expenses. Without expenses. Sans frais. Okay. The further negotiation of Sankuru is also, yeah, definitely. Every subsequent endorsee gets it subject to Saraku. If you want, for the benefit of everybody, I am repeating. There is a Saraku endorsement. The endorsee who gets it is further endorsing it. It will be Saraku only. How can he cure it? Because he can't go. How can he go? So it's like simple, boss. Endorsee A is endorsing to B. B is endorsing to C, Saraku. Now C cannot. Then C is endorsing to D means what? Saraku only it will go. So in case the acceptor or dry does not pay, D can sue C. C cannot sue B because B is Saraku. But D and C can sue A. Drawee. But they cannot sue B. The guy who made Saraku escape. When I give a diagram, you will see it. When I give example, you will see it. Now, there is an endorsement in blank. It is converted into endorsement in full. This is very interesting. I'm going to show you a picture, a diagram, and only you'll understand. I'll first read it, then I'll show the diagram and come back again. If a negotiable instrument, after having been endorsed in blank, is endorsed in full, means what? There is a negotiable. Let us, for sake of clarity, we'll use bill of exchange only. There is a bill of exchange. I am the payee. I'm going to endorse it. Okay. Now what I am doing? I'll endorse it in full. See this diagram, you will understand. X is the dryer. Y is the acceptor. No problem. Clean. Now the payee, X is drawing the bill on Y, directing Y to pay to a certain sum of money to his order. Now A is making a endorsement. A is now endorsing it in blank. What does that mean? A is taking the reverse side of the bill, simply signing and giving it to B. Please understand what is meant by endorsement in blank. Means A is simply turning that on the back. On the reverse side, A is signing, not mentioning the name of B. So B is taking it in blank endorsement. B's name is not appearing on that instrument at all. But B is having possession. Right? So he's a holder. And being a bearer with a blank endorsement, he's entitled to receive the money. What he does now, he endorses in full. He endorses in full to C. Okay. Means what? B is giving this instrument to C. When C gets the instrument, how does it look? X is the dryer, acceptor, sign is there, acceptance date is there, A is the payee, A sign is there, but B's name is not there. So now what does B do? B writes C's name and gives it to C. So A sign is there, B's name is not there, B writes C, pays C and gives it to C. Now clearly the instrument has C. Now what does C do? C simply signs it and gives it to D. Okay, now D is the bearer. He is entitled to receive payment or to sue. See, this is done under the Negotiable Instruments Act. Example, when bearer was entitled to collect. C was simply delivering it. D is the possessor. Now D is the bearer, is entitled to receive payment or to sue the drawer, acceptor or A who endorsed it in blank. But he cannot sue B or C because B's name is not coming anywhere. C's name is coming, but He has delivered it to D, okay, without endorsing it. So he gets it. D can only sue B. If, however, C, instead of passing the bill to D without endorsement, passes it by regular endorsement, D can claim against all prior parties. Except B. B's name is not coming anywhere. Who are all the prior parties? D can go to C, A, X, Y. He cannot go to B because B's name is not appearing anywhere in that. But if C merely delivers it to D, then D can sue only A and X and Y, but not C and B. Okay. This is the law as per section 49. If a negotiable instrument, after having been endorsed in blank, is endorsed in full, the amount of it cannot be claimed from the endorser in full, except by the person to whom it has been endorsed in full, or by one who derives title through such person. So that is why if he is, instead of passing the bill to D without endorsement, he passes it by regular endorsement, then D will derive title through C. Then he can sue C, A, X, Y, anybody. B cannot be sued because B's name is not appearing anywhere. B is simply taking it and giving it. Okay. Now, where this is, do you remember 58? We mentioned 58 in an earlier section. Do you remember? Subject to 58, we said. All provisions relating to endorsement subject to 58. The minute 58 is applicable, all this is out. 58 is very important. When a negotiable instrument has been lost or has been obtained from any maker, acceptor, or holder by means of an offense or fraud or for unlawful consideration, no possessor or endorser who claimed through the person who found or so obtained the instrument is entitled to receive the amount due thereon from such maker, acceptor, or holder, unless such possessor, endorsee is some person through whom he claims was a holder thereof in due course. So 58 exemption is holder in due course. But other than holder in due course, no holder can claim the amount of a lost instrument which is found or he has obtained it by an offense of fraud or unlawful consideration. He has to prove that he is a holder in due course. Only then he will be able to claim. The holder of a negotiable instrument who has acquired it after dishonor, whether by non-acceptance or non-payment with notice thereof, or after maturity, has only as against the other party the rights thereon of his transferor. So, where an instrument has been dishonored, by non-acceptance itself, it was presented for acceptance, non-accepted. It was presented for payment, not paid. Or the due date mentioned is over. Now I have obtained it now. Then my right is only as good as the person from whom I got it, my transferor. Okay. I cannot, in other words, I will not be a holder in due course. My rights are now subject to the rights of the person whom I got it. That is why, do you remember one important condition we said? The bill should, if you want to be a holder in due course, the instrument should be otherwise validly accepted. And it should be before maturity. Go back to holder in due course, you will understand. Otherwise, you will not be a holder in due course. After maturity, if you got it from anybody, you are not a holder in due course. You will have only the same title as a holder, which means you cannot go to the acceptor. Okay? You cannot go to the endorser. You can only go to the drawer. A negotiable instrument may be negotiated until payment or satisfaction thereof by the maker, drawer, or acceptor at or after maturity, but not after such payment or satisfaction. Once the payment has happened, but one thing is that this is more for safety, because if suppose I am the Shah who is going to make a payment on a negotiable instrument, 100% I will take physical possession of the instrument and cancel it. Otherwise, I will not make the payment or satisfaction. So thereafter, it cannot be negotiated. I just simply have to cancel it, put it in my file, that's all. For evidence, nothing else. Okay. Now we talk about negotiation back. It's a very interesting concept. Negotiation back. Okay. I think we will see that and then have a small break. negotiation back. An instrument may be negotiated by a subsequent endorsee to a prior party on the negotiable instrument. This is called negotiation back. This is also known as circuitry in action. See, look at this. A is the drawer, B is the acceptor, C is the payee. Now C is negotiating to D, D is negotiating to D, F is negotiating to E is negotiating to F. Now what happens now? F is again negotiating to C, boss. Got it? Now C is giving to a holder in due course. X, some X. Now, what rights does X have? All these parties are discharged. Why? Because think about what will happen. In case there is a dishonor by B, X will sue C, C will sue F, F will sue E will sue D, again C, D will sue C will sue F. Hey, what's happening here? Therefore, Mansfield was very clear. He said, look here, the minute one of the prior parties gets it back, then all parties are discharged. Okay? The person who becomes a holder in due course under negotiation back cannot make any of the intermediary endorsers liable. So once X gets it, C got it first, then he endorsed to D, D to E, E to F. Now what has happened? F has again endorsed it to C. So C's name is coming 2 times. Imagine the reverse side of that bill. How will it look? First, C. C will say pay F, C. Pay D, C. Then pay E, D. Then pay F, E. Now, pay C, F. Again, C is coming back. So, all the prior endorsees will get cleared. C will become directly liable. So, X can only sue C, A, of course, or B. In case it's an accepted bill, dishonored, B can also be sued. Okay? But these 3 gentlemen are released. You got it first? So, why? Because otherwise, it will be foolish. Nah? That's why it's called circuitry in action or taking up of a bill. C takes the bill up again. The very same bill that he was having, he never did D. Now he's getting it back, taking up. Or it's called circuitry in action. See, you can actually see the circular movement here. It will become foolish. So the law says D, E, F, you get out. Mr. X, you sue C. C can sue A can sue B. No problem. Enjoy. All of you enjoy. Go and fight with each other. Whatever may be the decision will be the final. Okay? That is called circuitry in action. But there is one exception. But where an endorser had excluded his liability by the use of the word sa recu or without recourse to me, and after that becomes the holder of the instrument in his own right under the negotiation back, all intermediary endorsers are liable to him, and in case of dishonor, he can recover the amount from all or any of them. So, think about it. C makes a sa recu endorsement to D. Please understand. C makes a sa recu endorsement to D. Now, D goes to E goes to F. F again makes it to C. And Darshan, to answer your question, now clearly you see, C is making a sa recu endorsement to D. Let us say, D cannot give better than that. E gets it sa recu. F gets it sa recu. C gets it sa recu. Now that sa recu of C, our friend C is again transferring it to X. Now, technically, X can sue C because this endorsement is not sa recu, but the original endorsement by C is sa recu, na? So C will simply say, hello, Baba, don't come to me. Now what happened? X has to go to E, F, E, D, A, B, but nobody can go to C. There is no circuitry in action, provided C has made a sa recu endorsement to D. X, so normally in circuitry in action, X cannot sue D, E, or F unless the endorsement by C was a sa recu endorsement. Are you able to understand? If C has made a sa recu endorsement to D, what happens? His liability is out. So, in case there is a dishonor of the bill, X cannot sue C. Kyun? Because it's a sa recu, Baba. C has said sa recu. Now, what can X do then? He has to go to D. D will go to E. E will go to F. F will go to A to B. That's all. There will be no circuitry. C is cut off. So, this is the point you have to understand. I hope this is clear. Fairly clear, na? So, my dear friends, let's have a small break and then we'll come back. Almost the topic will be over. Dishonor for acceptance, presentment. And we can do. Next topic is discharge. And then dishonor and then close. Okay. So, if you have any doubts, you can ask. A small break. Sir. Okay, I thought I will just as well come back. Welcome back from your. Now, Mayur Gupta is asking a nice question. It says, if C makes SAR recu endorsement to D, then X can sue C. No, the minute there is a SAR recu endorsement, then nobody can sue C. Please understand. Nobody can sue C. Okay? But if your question, you reword it. If C does not make SAR recu, if C makes normal endorsement, then X can only sue. Mayur, let us get it clear. C makes does not make a SAR recu endorsement. Then there will be circuitry in action. because it's not a Sareku. Therefore, X can sue C, C will sue D, D will sue E will sue F, F will again sue C, so on and so forth. So the law says if C has made a normal endorsement, not a Sareku endorsement, then X can only sue C. D, E, F cannot be sued. Of course, C can sue A and B and all. But once it is not Sareku, then there is a circuitry in action. But suppose C has made, as you are saying, C has made a Sareku endorsement. That means what? His liability is excluded. So nobody can sue C, Maha. See, let us say that there is a dishonor, then X will sue C. Okay, can't. Because C is Sareku. There itself things stop. So what he will do? He has to go to D. D is the prayer. He has to go to F. Then F is the prayer party. F, then F, E, D. Nobody can go to C. So D cannot go to C. Na Sareku. Directly it will go to A. So if C makes a Sareku endorsement, then nobody can sue C. X cannot sue C. Nobody can sue C. That is what you have to understand. Okay. You got it, Mr. Mayur Gupta? Yeah, N and S are silent. See, any consonant coming at the end of a French word generally is not pronounced, with some exceptions. Generally, a consonant coming at the end of a word in French is not pronounced. See, you are saying you are familiar with the word bonjour, right? Why do you say bonjour? You should say bonjour, na? Bonjour, bon. So that N won't be. Jew, bonjour. So the R is also not pronounced. Bonjour. Bonsoir. The R is not pronounced. If only D, see, wherever it happens, see what has, if D makes what happens now, C has not made Sareku. D has made Sareku. Am I correct? Now, just go on now. Wherever it comes to Sareku, no suit possible. So, X will sue C, C will sue F, F will sue E, and one sec. No. The minute this thing has happened now, the minute, see, D has made a Sareku endorsement, you are saying. Then it has gone to E. Then it has gone to F. Am I correct? Then it has gone to C. Got it? Now C has become a prior party. Then automatically, by virtue of circuitry in action, straight away D, E, F are out. Why? D need not have... See, the minute it goes back to C, no, automatically D, E and F are out. Not only D, E and F also cannot be sued. Only C. But what could be argued is, see, in this case, C gets it from F Sareku of D. C. So C actually cannot sue D. Even then, there will be circuitry in action because D will be skipped. C can still sue E and F now. It's only D which is Sareku. D is Sareku. Whereas E and F are open, they can be sued by C. So, but the minute C gets it, automatically D and F will be discharged. Got it? So, whoever makes, see, the principle you have to understand. I think most of you are not understanding the principle of Sareku. The minute Sareku is made, automatically the person making the Sareku endorsement is discharged. No more going to him. Okay? No more going to him. He is not liable on that instrument. Okay? So, there could be many methods of discharge. One could be cancellation. The other could be release. And of course, the best method is payment. Discharge by payment. When the holder of a negotiable instrument, correct, that Sareku fellow is removed from that cycle. Correct. When the holder of a negotiable instrument or his agent cancels the name of a party on the instrument with an intent to discharge him, such party and all subsequent parties who have a right of recourse against the party whose name is cancelled are discharged from liability. So, once you discharge somebody, means you remove their name. Okay? You scratch it out or cancel it. Then such party and all subsequent parties who have a right of recourse against the party whose name is cancelled are discharged from liability to the holder. Okay. Any holder can do this, but you have to be careful. There's one exception. where the holder of a negotiable instrument releases any party to the instrument by any method other than cancellation, the party so released is discharged from liability. Where he writes a letter or gives a notice and says, no, you are released. When payment on an instrument is made in due course, both the instrument and the parties to it are discharged. Please understand, when there is release or cancellation, only party is discharged. But when payment is made, the instrument itself is discharged and the parties are also discharged. Okay. By the holder allowing the drawee of a bill more than 48 hours to accept. Okay. Then all parties are discharged. By the holder agreeing to a qualified or limited acceptance of bill of exchange. See, the bill is being presented for acceptance by the holder, who is also the holder in due course. The drawee now says, the bill is for 5 lakh, I am accepting it for 2,50,000. Now, the holder should simply come back to the prior parties and tell them, look here, I am getting qualified and acceptance. I am rejecting it and I am treating it as dishonor for acceptance. If he does not do that and he agrees to a qualified or limited acceptance, then all prior parties are discharged. All prior parties before him are discharged. Okay. When the drawer of a check does not duly present the check for payment, by the bill coming to the acceptor's hands after maturity, the minute it comes to somebody's hand after maturity, there is a discharge. Okay. Discharge by material alteration. Any material alteration of a negotiable instrument renders the same void as against anyone who is a party thereto at the time of making such alteration and does not consent thereto, unless it was made in order to carry out the common intention of the original party. So, any alteration of the negotiable instrument become void against anyone who is a party thereto at the time of making such alteration and does not consent thereto. Okay. So, for example, any prior party whose consent is not there is discharged. See, in our own example, let us take. Payee is giving to NDRC 1. Now, NDRC 1 is giving it to NDRC 2. At that time, NDRC 1 makes a material alteration. NDRC 2 takes it with that alteration. Now, NDRC 2 can sue NDRC 1, but he cannot sue payee and drawer. Why? Because material alteration without the consent. Where a material alteration is made by an NDRC, the endorser will be discharged from his liability, even in respect of the consideration thereof. So, if you want to make any change, you have to get the consent of all the parties. If the holder of a negotiable instrument makes a material alteration of instrument, he loses the right of action against those parties who would otherwise have been liable towards him. This is a very powerful principle of law because that negotiable instrument was given subject to certain conditions. You change any condition without my consent, I am not liable on it. That's all. It is a simple principle on which this operates. By material alteration, the original identity of the original instrument is destroyed. And those parties who had agreed to be liable on the original instrument can't be made liable on the new contract. So any material alteration, you should get the consent of prior parties if you want to make them liable. If it alters the business effect of the instrument or it causes it to speak a different language in legal effect. Change in the name, change in the date, amount, whatever. Alteration of date, time of payment accelerated or postponed, alteration of rate of interest if specified, alteration of the sum payable. For example, bill for 5,000 altered to bill for 500. No. Alteration in time of payment, bill payable 3 months after is altered to payable 1 month later. Boss, the bill was drawn on me payable 3 months after date. I accepted it. And then gave it back. It was endorsed. So everybody who got it 3 months after date. Now suddenly you put 1 month after date and you come. Why I should accept it? No, I will not. It will discharge all the prior parties. Suppose the bill is payable through a particular bank. If you change the bank name, gone. Whatever. Alteration by addition of parties. No. Any alteration which is material, which has the effect of changing the business effect of the instrument is out. Alteration by tearing material part of the instrument, by increasing or affixing stamps, alteration by erasure of an account payee crossing, alteration of an order check to a bearer check, except with the consent of the drawer. But certain alterations are, see, mild disfigurement of documents, some ink is smudged, no problem. Alteration made by a stranger without the consent of holder and without any fraud and negligence on his part. An alteration made to correct a clerical error or mistake. So instead of 1823, date is 1832, it's corrected, no problem. Okay. But these are all again, subject to facts. There should be no fraud intention. Where the alteration is carried out with the view to carry out common intention of original parties. Okay. Or order after the name of the pay is inserted subsequently, no problem, because or order is the intention of the original party. You can always make alteration with the consent of the parties liable there. Okay. Material alteration doesn't affect the liability of those parties who become liable after the alteration is made. So after that, you came into possession knowingly. Know of it. An alteration which is not material, when a bill payable to bearer is converted to bill payable to order, etc., no, it's not a problem. See, an incomplete instrument can be filled up by the holder. I gave you now, where the sum is left blank, you can fill it up. Name is left blank, you can fill it up. No problem. It enables the holder of an instrument endorsed in blank to convert into endorsement in full. See, I gave you a check wherein I have signed, I have not mentioned any name. You put your name there. No problem. Here, addition of parties is allowed. The holder of an uncrossed bill, may cross it. Okay. Alteration should be apparent on the face of the... So don't say second point. Kindly say which point. Because which is the second point here, you tell. How do I know which is the second point? You mean the alteration made by stranger without... See, do you mean alteration made by a stranger without the consent of holder and without any fraud and negligence on his part? Is this what you want me to explain? If so, just put yes, I will explain it. See, affixing stamp, you remember, where I am a holder in due course, I can claim up to the stamp value. Now, suppose you increase the stamp value, it will affect my right now. So, at the time of signing, only this much stamp was affected. Now, you affix more, then it's a material alteration. Sweetie ji, if you confirm that this is what you want, I will explain it. I'm assuming that the second one is alteration made by a stranger. I don't know. There is a problem. Which one is second? Slide number 104. Okay, 104. By the holder agree. Okay, that's very simple. Madam, you are not having presentment. So you're talking about by the holder agreeing to a qualified or limited acceptance. This topic is not in your syllabus. That is presentment for acceptance is not there. Okay, presentment is not there. Now, but what happens now? Bill of exchange is made. Bill of exchange is made, it should be accepted. Bill of exchange is for 5 lakhs. Bill of exchange is 5 lakhs. Drawer has drawn on the drawee 5 lakhs. He has given it to the payee. Now, payee has endorsed it and given to endorsee 1. Now, endorsee 1 is going to the drawee, presenting the bill. The drawee says, see, what should the drawee do now? He has to accept it fully, in full. Instead, he says, I will accept the bill. But only for, if it is 5 lakhs, he says, I will accept the bill, but only for 3 lakhs. Now, this is called qualified or limited acceptance. I'm only giving one example of amount. It can be like the bill is payable after 30 days after sight. So the acceptor, there is a drawee says, I will accept the bill, but not 30 days, 60 days after sight, I'll accept it. Whatever he says, if there is a change between what you have originally told, the drawer has told, and what is being told by him, then the holder has 2 options. 1, he can agree to the qualified or limited acceptance. If he agrees, then the bill is still valid, but all prior parties are discharged. Are you able to understand? All prior parties are discharged from liability. What does it mean? Drawer is liable, payee is liable, endorsee 1 to endorsee 1. But once the endorsee one accepts qualified or limited acceptance, then tomorrow if there is a dishonor, he cannot sue drawer and pay. Suppose endorsee one, now that limited accepted bill is now endorsed to endorsee 2. Now endorsee 2 also cannot claim any prior party except endorsee 1 from whom he received it. He is deriving his title through endorsee 1. That fellow he can sue. But before that he cannot go. So any prior party before that limited acceptance is discharged when there is a qualified or limited acceptance. Have you understood, madam? If not, then you'll have to specifically ask me what the doubt is. I will answer. Now we have seen alterations permitted. Then, see, this is 40 is also very interesting. I hope I have answered your question, sweetie ji. If not, you can tell me. Now you have to be clear on what is your doubt. Where the holder of a negotiable instrument, without the consent of the endorser, destroys or impairs the endorser's liability against a prior party. Thank you, sweetie. Because once you say you are clarified, now I'll feel happy. Without the consent of the endorser, destroys or impairs the endorser's remedy against a prior party. Now then the endorser is discharged from liability to the holder to the same extent as if the instrument had been paid at maturity. See, this example will be very easy. X is the drawer, Y is the acceptor, right? B is the payee. He endorses in full to Peter Williams. Then Peter Williams endorses in full to Wright and Company. Wright and Company endorses in full to John Rosario. Now, John Rosario gives it to A, endorses and gives it to A. Now, A is a rascal. He is the holder of the bill of exchange. He is a rascal. You know what A does? He is suing. See, there is a dishonor. Let us say that there is a dishonor. The acceptor is not paying. Now, what A should do? A should sue John Rosario, Wright, Peter William, B, X, everybody, Y. Instead, this rascal, I'm sorry to use the word rascal, see what he's doing. He puts the bill in suit. He files the suit against John Rosario, but he strikes out without John Rosario's consent, Peter Williams and Wright and Co. Are you able to see? A is filing a suit against John Rosario. Now, John Rosario will include B, X, B, Wright and Co, Peter William, B, X, Y. But what this rascal A does, he cancels Peter William and Wright and Co. He does it without John Rosario's consent. Now, see what has happened? Without John Rosario's consent, without the consent of the endorser, A has destroyed or impaired the endorser's remedies against prior party. So, John Rosario could have sued Wright and Co and Peter William. Why this rascal A will go and write off the strike? Maybe they are friends. Maybe they had a drink in the bar and then Peter William said, hey, come on, cancel man, and then file a suit. So this fellow does it without consent of John Rosario. Now John Rosario simply says, look here, I am not liable. Thanks to Lord Mansfield, I am not liable. I am discharged from liability to you, to the holder, to the extent as if the instrument had been paid at maturity, man. As far as I am concerned, get out. And you only foolishly what you did, you removed John Rosario, Peter William and Wright and Co. They will also not be liable because you cancel them. Now you go directly to B and X. That's all. Y who dishonored? Go and take. Don't come to me. And why he can't go to Wright and Peter William? Because foolishly he removed their name. Now he has lost remedy against them also. So this is the example given by Mansfield himself in the Negotiable Instruments Act. This example is given by Mansfield himself in the Negotiable Instruments Act. Now discharge from liability, discharge of parties. We saw when a party who is liable on a negotiable instrument ceases to be liable, he is said to be discharged. Discharge of instrument can happen only when the instrument is paid. Dishonor means dishonor of negotiable instruments can be of two ways. One is non-acceptance, non-payment. See, I am the holder. I go to the drawee for acceptance. At the time of presentment for acceptance, he gives me qualified acceptance. Now, I have two options, I said. Now, one is to take it, in which case I will discharge all prior parties. The other is, I will treat it as dishonor for non-acceptance and file a suit immediately on all the prior parties, including A. Or go back to the prior parties and tell them, hey, there's a non-acceptance. I'm serving notice on you. That's called noting. I'm protesting. Pay. So if the payment is made immediately, no problem. But if they are not paying, then suit will be filed against the prior parties. So he can do that. Instead, if he accepts qualified, then only the prior party will get discharged. So dishonor for non-acceptance means it's a dishonor. Dishonor means that negotiable instrument is not honored, is not either accepted or it is not paid. Okay. So dishonor for non-acceptance means the drawee is saying, I won't accept it. Dishonor for non-payment is like you go to him and say, please pay. He said, go, I can't pay. It's all non-payment. Whatever it is, a bill of exchange is said to be dishonored by non-acceptance when a bill is duly presented for acceptance and the drawee or one of the several drawees not being partners. Why not being partners? Because partners are mutually bound, mutual agency. Even if one partner signs, it's enough. But if there are several drawees not being parties, then any drawee or one of the several drawees refuse acceptance within 48 hours for the time of presentment, the bill is dishonored. Okay. Where the presentment is excused and the bill is not accepted. Where the drawee is incompetent to contract, the bill may be treated as dishonored. Where the drawee is a fictitious person. See, drawer can draw on a fictitious person. But if that, then what to do? The drawee is a fictitious. See, drawer can be fictitious, Baba, but drawee cannot be fictitious. Who will accept it? When the drawee could not be found even after reasonable search. So you have to be very careful about the identity of the drawee. When a drawee gives a qualified acceptance, the holder may treat the instrument as dishonored for acceptance. Okay. The holder of the bill can start an action against the drawer and the endorsers, all prior parties, and need not wait for maturity of the bill. Okay. I think this is the further answer to Sweetie Kumari's question. What happens if qualified acceptance is given? You can then treat it as dishonesty. You accept it, then prior parties are discharged. If you then, or else what you do, you go back to the prior party, file a suit against them, drawer and the endorsers, right? A promissory note, bill of exchange or check is to be dishonored by non-payment when the maker of the note, acceptor of the bill or drawee of the check makes default in payment upon being duly required to pay the same. See, it's due on a certain date. I serve it on you. I come to your office and say, pay. You are not there. Door is locked. I go to a notary. I ask him to write a letter to you, threatening you. My lawyer will write a letter to you saying, so-and-so bill is due. Are you going to pay or not? No, if you don't reply, dishonored. Okay? Then I can file a suit. Not only against you. You means the acceptor. Against every prior party, I'll file a suit, subject to the rules that we saw earlier. I am the final endorsee. I can file a suit against all the prior parties, subject to the rules that we saw. The circuitry in action, striking a Peter Williams case, where, or rather John Rosario case. These are all examples where the holder cannot sue everybody in the chain. Okay. Again, negotiable instrument is dishonored by non-payment when the presentment for payment is excused and the instrument when overdue. Presentment for payment is excused means anytime you can go and ask the payment. And the instrument when overdue remains unpaid. I don't have to present it. You have to pay. And you are not paid. It is overdue and it remains unpaid, dishonored by non-payment. What they mean by presentment is excused means there is no need to present it to you for acceptance. Okay. Where a promissory note was sent by registered post and the party liable refused to receive the post, the bill was held to be dishonored. That's why I said, I come to your office, you are keeping the door locked. I send a registered post through the post office, which is my agent. They present it to you. You are not accepting it. Dishonor. Now, so we have come to dishonor of instruments in general. Now we come to another very interesting topic, dishonor of checks. Dishonor of checks. This is a very interesting topic, 138, which is also commercially relevant. In fact, in this entire law, if you ask me, under which section there will be maximum number of case laws, 138. In those days, I used to read case laws and then edit them and give to one magazine for publication, for which they used to pay me some amount and whatever. Now, when I was editing case laws on dishonor, negotiable instrument, out of 10 in one 3-month cycle, 10 cases have been decided. 8 cases will be dishonor. Dishonor of check. So many complications are there. But basically, it is a summary proceeding. Boss, the banking system should be trustworthy. Suppose a person has issued a check and then he dishonors it. Then the entire system is threatened by that criminal fellow. So, where any check drawn by a person on an account maintained by him with a banker for payment of any amount of money to another person from that account for the discharge in whole or in part of any debt or other liability is returned by the bank unpaid. It is called dishonor. But then the check should have been given in discharge of the whole or part of any debt or other liability. A check which is just given as a debt, gift or donation, or as a security or in discharge of a mere moral obligation or for an illegal consideration would be outside the purview. For example, A hires B to beat up C. A hires B to beat up C. Now, is that legal? It is illegal. It is prohibited by the Indian Penal Code. Okay. Now, B accepts to beat up C. Give me 5 lakhs. Okay, I'll give you 5 lakhs. Here is a check, 5 lakhs. Illegal, yeah. Then B goes and beats up C and then presents the check through his bank. Now A comes out and says, it's illegal. It's illegal consideration. I won't pay go. See, technically A is also in deep shit because the minute he's saying it's an illegal consideration, he is guilty of an offense. Okay. So any illegal consideration you cannot claim. So in which case, what will happen? The check will only be a collateral. Okay. Finally, only cash has to be paid. So the idea is returned by the bank and paid, but be careful. Suppose you have stopped payment. See, there is something called stop payment. That I have given you a check, post-dated check, which is payable on the 15th of September. Now, after giving the check to you, I find that there is a mistake understanding. So I send a letter to my bank saying, please stop payment on this check. They will stop payment. For which they will charge me some money, but that's okay. I'll stop the check. Okay, stop payment. Stop payment is not dishonor. They will return the check to you saying, refer to drawer. Whereas if there is no money in the account, they will say insufficient funds or beyond facilities or beyond the limits. That is, if it is an OD account, Mr. A has got an OD for 5 crore. Now he is issuing a check beyond 5 crore, it has gone. Then check will be dishonored for lack of facility or lack of, loan amount. Either exceeds arrangement. That's what they say. Exceeds arrangement. That's the word they say. Either because of the amount of money standing to the credit of that account is insufficient to honor the check, or that it exceeds the amount arranged to be paid from that account by an agreement made with that bank. Exceeds arrangement. Means loan is there with the bank, but the amount of check is beyond the amount limit prescribed by the bank as a OD, whatever it is. Friends, dishonor of check is a crime against the society. I'm sorry, I don't think that I'm talking about myself and all, but 3 generations, my family, my grandfather began, my father, myself. We have never bounced a check. Even inadvertently, we will be doubly careful before giving a check. My grandfather, my father also, rarely, in my cases. Only once, one bank called Times Bank was there, rascal bank. That fellow, see, I had deposited a check. Check was for 2.5 lakhs. Should have been cleared. Thereafter, I gave a check to my aunt for 1 lakh. She presented the check, but on the day, see, I was expecting the credit to come and this will be paid. Unfortunately, that fellows, what they did, the check has come and into the bank. But before crediting it, they have rejected my aunt's check, dishonored it. So my mother's sister, so she immediately said, she called my mother, see, your son's check has been dishonored. Of course, she was not rude about it. He said, it's a rare thing in your family. We have never known in your family to happen. I got angry. I told my aunt, just wait, give me 24 hours, you give me. And then she said, no problem. I went to the bank and I asked them to produce the records. Clearly, it is my check's credit has come 1 hour before you rejected, which means what? When you rejected, money was there in the bank. It's your inefficiency. I said, I'll sue you buggers. So finally, they fell at my feet. They gave me 10,000 rupees compensation for my reputation. They agreed to give me 10,000 rupees credit in my account. And also, they went to my aunt's house, gave her a letter of apology and honored the check. They gave a letter of apology to me and said, it's no fault of Mr. Srikanth, it is only our mistake. I said, unless you do that, I will sue you for substantial damages of reputation. You might think this is an exaggerated story. It is not, because reputation is more important than money, my dear friends. Any amount of money I have earned in my life, reputation is more important. So this is something. In fact, my grandfather is even more particular about it. See, his logic was, if you cannot afford something, do not enjoy it. Don't buy on credit and enjoy. Everything if you have money, buy. Otherwise, don't. This was his theory. So if you give a check now thinking that you can earn and no, be careful. See, why I'm communicating this to you, my dear friends, I told you that, chartered accountants should be skeptical. Similarly, chartered accountants should also be honorable and honest. Our honesty can never be questioned because we are members of the institute. See how much you are struggling to become a member of the institute. Don't spoil all that hard work by doing something that is dishonorable. Okay? Times Bank is not in existence now. It got acquired, I think, by HDFC Bank. Times Bank was acquired by, I think, HDFC Bank. Useless bank number one. Useless bank number one, Times Bank. It is not now there. I think it was acquired by, if I remember right, HDFC Bank. Thereafter, I closed the Times Bank account after that. Okay? I closed that account. Then I again opened an account with HDFC. Why HDFC? But Times Bank account, I said, close that account. And such a useless bank, how they can continue? One of the worst fellows. No. So, in case check is bounced, such person shall be deemed to have committed an offense and shall be punished with imprisonment for a term which may extend to 2 years, or with fine which may extend to twice the amount of the check, or with both. So, it is an offense punishable with imprisonment for a term which may extend to 2 years. But normally the courts rarely do it, or with fine which may extend twice the amount of the check. Why twice? Because, see, I have received a check from A for 5 lakhs. Now I have to get 5 lakhs from A for a debt due to me. Fellow bounces the check. Now, what the court will do, they will ask A to pay 10 lakhs. 5 lakhs will be given to me because that 5 lakh is mine now. They will give it to me. With interest, they will make him pay to me. And that balance 5 lakh fine, they will deposit it in the government account. Because, see, after all, the government is affected by these fellows. So, the court is running because of these criminals. So, they will take the money and put it in the government treasury. So, in fact, there was a famous actress in Tamil Nadu. Also, I think there was a Telugu lady. I don't know if you know her, Roja. Her name was Roja. This Roja Pounds, poor lady, nice girl, but unfortunately, she trusted some people who borrowed money on her behalf. Some nonsense. She signed a check and gave, thinking that the check was bounced. So the guy who got the check in crores, I think they produced a movie and all, it flopped, so she couldn't pay, whatever. The fellow filed a 138 case. 138 case is a summary proceeding. See what you have to do. You just have to see to it that these conditions are satisfied. It is called summary proceeding. 138 action is a summary proceeding. The check should be presented within validity period. That is 3 months from the date mentioned on the check. the demand for payment through notice and writing should be made within 30 days. So the check is presented, dishonored. The notice of dishonor comes to you now. From that day, within 30 days, you or your lawyer should write a letter to the party demanding payment. Ideally, send a lawyer notice. Don't write on your own. Hire a good lawyer, pay him 10,000 rupees, 5,000 rupees. He will send a nice notice demanding payment legally. So, whereas you have given a check to my client, whereas the check is for so much money, whereas with intent to defraud my client, with intent to you have bounced the check, whereas my client is now demanding payment, which has to be made, okay, within the next 15 days. You have to give notice. Now, from the day you dispatch it, wait for 15 days. The lawyer has not made the payment within 15 days. Straight away, you can go to court and file 138. See, what is happening is, this is a summary proceeding. I am presenting it. I am getting a dishonor notice from the bank. 30 days, I have to give a notice. I give a notice. Hey, you're still having, that gentleman is having still 15 days to make payment. Make payment. If you close the account, I'll be happy. I don't want to make you go to prison. I want money. It doesn't make the payment. Then on the expiration of 15 days from the date of notice, you go to court. That's all. It's a summary proceeding. But usually, invariable defense will be, I've seen many cases where the defense for dishonor will be, see, they will say, sorry, I'll just show you this one. The check was given not in discharge of a debt or other liability. It was only given as collateral. There was no intention to present the check. This is the defense they will take. And they'll give some all bullshit for it. Some bullshit, no, they'll say, we had an arrangement by which there was no money due. Just as a collateral, I gave it to him. Some nonsense they will say. Then only the case will get dragged on. But still, if you are able to show clearly, see, better say, for example, you raised an invoice on him. He accepted the invoice. DC is there. Signed the delivery challan is there. Goods have been received by him. Check has been sent by him. Presented, dishonored, demand notice sent, 15 days, no payment. Go to, okay. There is that Roja, poor lady, she was in the case was filed. And the court was said, you have to pay. So she could have paid within 15 days. She didn't pay. Maybe some reason. Then she was made to come before the court. She refused to come before the court. She said, I am an actress. I'm busy. I can't. Some nonsense. Court got very angry. You can't play games with the court, yeah? So they sent the police. They harassed, literally brought her before the court. They said, produce that lady before me. Then they said, you have to pay. She said, I will pay it by the end of the day. Then said, till you pay, you stand in front of the court. That was the order passed by the court. It became a big newspaper headline. Till you see, the payment was 1 crore or something. The lady was arranging it. The court judge said, till the payment is made by you, you stand in the court. You don't have to go to prison. You stand in the court here. Okay. So she stood there in the court before everybody till that payment was made. Okay. I remember this about 20 years ago. This happened. Roja is now an MLA or MP. I don't know. Big shot. But it really happened. And that I read that news in a vernacular magazine also, where her photo was put in the court, Roja standing before court like that. Just this is more for making you understand the seriousness of this provision. 138 is very serious. If the correct lawyer takes it up and does it properly, 100% you can collect the payment through 138. Okay. Many times I tell my clients, we're having huge debtors accumulation, more than 180 days and all. I tell them, Baba, you are having a posted check now. Why don't you take 138 action? 138, no, sir. Relationship. Hey, that fellow, what relationship is having? Threaten him. At least send a notice. Present the check, get it dishonored, get the notice. After the notice, let's see what happens. Okay. Many times when the notice is sent now, payment will come within 15 days. I have noticed it. So the period of 3 months shall be completed from the date mentioned on the check. Okay. Where a person instructed his bank to stop payment due to non-ability of the adequate amount, 130 is adequate. See, on the day when the stop payment was given, if there was no money in the bank, still that is insufficient. But that has to be proved. But if money is there, but for other reasons we stop. For many reasons I can stop. it is not dishonor. Similarly, posted checks can be taken, nothing. Okay. So at last we have come to a conclusion of our Negotiable Instruments Act. And thank you, Ms. Vitti, for examples and charts. Wherever possible, I try to give practical examples from my own professional experience or from general experience in the world and share with you. So I'm so happy that we could all interact with each other. So many of you are so regularly have attended, because tomorrow and day after you will only see my video or some other video you will see. And I don't know. So anyway, I thank all of you, Darshan, Aisha, Rajni, Bhumika, Rushita, Mayurji, Keshav Thakurji, Darshan, of course, Mohit, so many people. I cannot see you. In that way, I am a blind man because I cannot see you. But I am able to, you have Varsha, so many of you, Mohit. Okay, I really enjoyed handling session for you, and I hope to be in touch with you. And not through I will not give my WhatsApp and all. I want to meet you as members of the institute. A day will come when you will see me, because you know this ugly face. Somewhere I may be visiting Punjab in Chandigarh, or I may be visiting Pune or Nagpur. You may see me in some hall somewhere. Come and just say, I'm so and so, I attended your LCC. I'll be more than happy to, congratulate you. Looking forward to that day when you will become member of the institute, etc. Today is the last live class. Tomorrow you will be seeing the video of general classes and video of interpretation, because some of my clients are completing 50 years. And my father and I together, we have been their auditors for 50 years. So they have invited for that occasion, and I'm unable to say no. And your classes need to be over by 50 days. In case of any doubt, if I have accepted you as a friend in LinkedIn, yes, you can. But generally, LinkedIn, I see it very rarely. Let us check. If I see that, I will immediately answer, definitely. Or else you send a message in LinkedIn. Through LinkedIn, I will share my WhatsApp number. WhatsApp you send. Darshan, I can give you as a special case, I can give my WhatsApp number to you. Okay? In case of doubts. Wonderful. Thank you. Thank you very much. And we will look forward to seeing you again. Good day. Bye.